To talk the Fed, the Euro and much more, we are joined by Patrick Reid from Adamis Principle. Patrick, great to speak to you as always. Has the Fed blinked in the rate path hike after Powell's neutral comments? And next week should give us more, but what are the options?
Hi, Jack. Look, it's hard not to talk anything other than Brexit at the moment, but there are some big narratives, some big stories out there. And the key thing recently, before all of this recent Brexit ongoing circus happened, was Jay Powell's recent comment and his change of tone and words when describing the rate path. So the key thing here is he changed his words from well below neutral when describing the rate path to just below neutral. That reliably has been put at between 2.5 and 3.5%. We sit at 2.25. So he's just telling the truth. He's just stating a fact. Is this a dovish pivot? No, I definitely don't think so. Is he basically aligning himself to the OIS curve at one hike next year? Yes. Is the Fed going to hike next week? Yes. My opinion, many other opinions too. Will that hike be a full 25 basis points? I'm not so sure.
So we've seen Italy and now France, but has the euro been suffering from the uncertainty with Brexit? And what are the forecasts?
There is no question the euro should be higher. Basically, some of the macro guys I'm talking to saying minimum 115. Some are saying 116, 117. The fact is this. Italy has kind of calmed down a bit. BTP Bund spreads are less than 300 basis points. So that's okay so far, although not out the picture. The key thing is as we get to the sharp end of March, the spectre of Brexit looms very large. If there's any meaningful plan, and that includes a delay to March decision exit or anything along the lines of a can kicking, I see this to break 115 and then 116 upwards. Don't forget, we do have a moderately dovish Jay Powell. Certainly that's how the market's seen this. The only other caveat I'll say is the data in Europe hasn't been flying off the shelves. Obviously, there's a global headline on CPI has been suffering and will continue to suffer because of WTI and oil declining in price. But I just think if there is a meaningful agreement, we see euro at 170.
China and a global slowdown is a big concern. If it catches a cold, when will we all sneeze?
So Trump and Xi's ceasefire at the G20 Buenos Aires was a short-term relief rally. Things pretty much corrected, but there are lots of other things that I'm really worried about in China. So, I see we are at a long-term structural shift, and we are entering a new Cold War in trade terms. So some of the things on the radar, certainly from my colleagues and friends in the macro world, are the IP theft issue. This is really important, and it's got legs, and we haven't really looked into and priced into all of that. The US protectionism, that's not going away, obviously. That's what Trump's all about, America first. And also the tariffs will actually continue. So those three things will play out, and they're here to stay. The second thing is China's deleveraging. They had crazy forecasts for GDP, and they kind of met them to a large degree. They're deleveraging, which is good long term, but it has to be managed really well. It will cut out some of the zombies, famous for these zombies companies, but we just have to really watch out. And this comes at the worst time because 2019, for a whole lot of other reasons, is looking like a recessionary year.
Well, a big thank you to Patrick, and thank you for watching. If you enjoyed this interview and would like to find out more, be sure to head over to dukascopy.tv.